When you're working directly with the seller, is you can find a win-win situation way easier than with the bank. If all you're negotiating on is price, it's gonna be hard to find a balance. Whereas if you have all these terms, you can mix match until you find a win-win. Why the hell would someone take on a 3% interest rate? The reason that's a question is because if they can take their capital from selling their house and put it in a high yield savings account, they're getting 5%. So the reason that sellers benefit from this, number one, and most importantly, is tax reasons. They can save a ton on taxes if they do an installment sale. Number two is they're getting a premium for their house. If I get a 3% interest rate, I care much less about my purchase price because I care about cash flowing. And number three is they're still getting passive income without fixing a toilet. This last note is balloon payment. The bare minimum that I like working with is 5 years. The longer, the better for me as the buyer. Usually the shorter, the better for the seller because they want their money. There's some sellers that say, no, I like these checks, even though it's 3%, I wanna ride this out for 10 years. The other reason they might want to ride it out for 10 years is because if their tax bracket changes on that installment sale, they can save even more taxes if they delay it further. So I'd say on average it's 5 to 7 years. I'm always shooting for 10 if I can get it. Now this might go over some of your head, but the simplest way to put it is when you are taking over someone else's loan, there's a risk of a due on sale, right? So the best way to think about this is it's not illegal because there's contracts in Utah that allow you to do this, but the banks don't want you to do it. The banks say in their contract, you can't take this over. So I took over a loan. I had no idea what loan I was taking over. This is one of my first creative deals and they called the note due. Now, the reason I lost a lot of money is because there was a deed restriction, which pretty much just means there's a rule on the loan that says investors can't own this. It has to be owner occupied, and the loan servicer can knock on the door once a year to verify that the owner lives there. So I was screwed. Now, my next thought was, okay, if I can't own this property, I need to sell it ASAP because the bank will still let you do that if you have permission from the original seller. That original seller was nowhere to be found. I'm calling his aunt, I'm calling his brother, trying to get a hold of him. He's apparently a drunk and nowhere to be found. And so I can't get the signature to request the payoff to even sell it. So it goes to auction and I lose 180 grand. The biggest thing for me is mindset. In this industry, you have to work on your mindset just as much as you are working on your business. And so for me, my mentality is that if I stick with real estate, I will do extremely well. Because there's so many years of history to prove that. There's so much data to prove that real estate creates more millionaires in America than ever. So that's my mentality is I just gotta learn from this and get back into the trenches and go from there. I think if you're understanding that real estate is your avenue, the first thing that I would do if I was starting over is I would go to a team to where I could learn a lot super fast. Whether it's like being an agent, whether it's working for a wholesaler, like find your lane and learn from someone. Once you have the confidence to do it on your own, then branch off. I think from the investment scene, if you're starting from scratch, the wholesale world is the best place to start because there's no risk. You'll get good at finding deals. And then as you get better, you start taking on yourself. Taking action, 100%. There are so many opportunities for you guys to learn from Real Estate Club, from going to events in Salt Lake, and it can be draining. Now, the biggest thing that people don't do is take action on the other end. I always say it's easy to be successful in this generation because people aren't willing to take action. So if you wanna sharpen your negotiation skills, if you wanna sharpen your flip skills, it's repetition, taking action as much as possible. But like being more tactical on that too, I think figuring out how to listen more than pitch in the negotiation world helped me probably the best. And that's what tech taught me, being less pushy and then listening more. Okay, so one of my, Thatch Nguyen, he's on Instagram. He's like, buy this, not that, whatever That's one of my personal mentors from Seattle. His philosophy is that the bigger asset class doesn't mean you're making more money. And that's where a big misconception is that if you go to multifamily, now you're making a lot more than people that dominate in the small multifamily or single family space. That's what I try and remember is like my expertise is in small multifamily and single family. It doesn't mean I need to go to a different asset class to upgrade. So I have that on one side. Now on the other side, it's a lot easier to raise money in these bigger asset classes like commercial, multifamily. And so I've been thinking a lot more about mobile home parks, which is a form of commercial real estate because of the banking side. So yes and no. Facebook groups are a massive, massive opportunity. There's a ton. I have my own like Beehive investment community that I've been growing. I would join like the top 10 Utah real estate investor Facebook groups. You're gonna see a ton of deal flow on there. And then I would just plug those in, find a calculator that makes sense for you. There's calculators everywhere. But once you're in the Facebook group, there's gonna be deal flow in there night and day, and just plug those in and get good at it. And then once you start getting familiar, then maybe you can start playing with some on Zillow and stuff. For me, which is completely different than the commercial space, is I try to be opportunistic in any market. I don't pay attention to if there's gonna be a crash. If there's not gonna be a crash, I'm buying in every single market. Like my goal is to buy multiple properties every single year. And so with that mentality, I'm always in buy mode. The saying is, timing the market. It's impossible to time the market. It's much better to have time in the market. So just set it and forget it. It might go down, but it's always gonna go back up eventually.